If you're a small, mid-sized country and you can print your own currency, you either print the currency to buy Bitcoin or you issue sovereign debt and swap it right into Bitcoin immediately, right? You can borrow money cheap and you loan it to Bitcoin at 24% return or better, right? So that's obvious, but I'm not going to hold my breath on countries because it's a very political thing. I think that the people that are the obvious beneficiaries that hopefully are listening to this podcast would be
Renowned macro investor and co-founder of Real Vision Group, Raoul Pal, recently gave his insightful thoughts on the state of finance in a recent interview. Pal explores what he thinks will be the next revolutionary stage for Bitcoin, the biggest cryptocurrency by market value. Raoul is renowned for his perceptive analysis of global economic trends. Pal starts off by putting the present status of the world economy in perspective and providing surprising data from leading financial institutions. The Institute of International Finance recently released data showing that global debt has reached a record high of $315 trillion, with mature markets such as the US, France, and Germany playing a major role in this growth. With productivity dropping and debt levels rising, there is a concerning trend where the global debt-to-GDP ratio is currently above 300%. Pal notes a permanent change in the economic landscape that requires organizations ranging from multi-billion-dollar firms to sovereign wealth funds to reconsider their investment strategy. According to Pal's research, there's a chance that conventional investing paths won't be adequate to navigate this changing financial environment. Let's hear what Raoul has to say.
They certainly won't take my advice, but the answer is the first country that can print currency and buy Bitcoin wins. A mid-sized country could probably do it, but you'd have to be aggressive. If we come back to a company, a company's stock is just like a country's currency, right? The country can issue currency. By the way, the reason El Salvador isn't quite synonymous is El Salvador doesn't have their own currency. So what I said, the first country to print their own currency and buy Bitcoin wins. You need to be able to issue $10 billion of your currency, swap it for $10 billion of Bitcoin, grow the Bitcoin 30% a year. And that's the way a treasury reserve asset's supposed to work, right? Because everybody then stampedes into that with you. MicroStrategy had a $600 million enterprise value, and we had $600 million in cash, and we had no growth, and we were dead money, and we were trading $2 million a day in the stock market, guy. That's just like the Russell 2000, or let's say the Russell 1000, the bottom Russell 1000 companies. They're all like that. They're all 500 million to multi-billion dollar companies, 100 million to billion dollar market caps. They all trade 1 million to 20 million a day. They've all got low growth because if you're not Nvidia or Apple or the Magnificent Seven, you just, you can't grow like Microsoft. So we took that Russell 2000 small cap company. We took our cash. We bought some Bitcoin. We bought 250 million of Bitcoin. We put that out on the wire. The shareholder base turned over. We bought another 175 million of Bitcoin. The stock doubled. All of our employees exercised some stock options. We bought more Bitcoin. Stock increased again. We sold a convertible bond. We bought more Bitcoin. The stock increased again. Bitcoin increased again. You fast forward 44 months and, the stock price 10x'd, the market cap 20x'd, the enterprise value 40x, that went from 600 million to mid 25 billion. And so what were we doing? What we were doing is we're issuing our currency, our stock that is, to buy Bitcoin, or we're borrowing against our stock to buy Bitcoin as digital capital. My advice to an aggressive small country, if you're small, mid-sized country and you can print your own currency, you either print the currency to buy Bitcoin or you issue sovereign debt and swap it right into Bitcoin immediately, right? You can borrow money cheap and you loan it to Bitcoin at 24% return or better, right? So that's obvious, but I'm not going to hold my breath on countries because it's a very political thing. I think that the people that are the obvious beneficiaries that hopefully are listening to this podcast would be shareholders, officers, and directors of the 10,000 small, mid-sized companies, especially publicly traded companies, which in essence can't outperform the Magnificent Seven. If you don't think you can outperform Google and Meta and Microsoft and Nvidia, and you have some money, You either take the cash and buy Bitcoin, you issue equity and buy Bitcoin, or you issue debt, either senior debt, or even better, you issue convertible debt, convertible to your equity, and you buy Bitcoin, because that allows you to recapitalize with an appreciating asset, as opposed to decapitalize and have nothing, or to hold capital in a depreciating asset that is kind of burning, has got a negative real yield and burning shareholder value.
Block Incorporated CEO Jack Dorsey made a big revelation earlier this month about the company's financial plan. The former CEO of Twitter, Dorsey, said on social media that Block intends to strengthen its balance sheet by acquiring Bitcoin on a monthly basis. Block demonstrates its dedication to dollar cost averaging, DCA, Bitcoin investments via this project, which is explained in a paper titled Bitcoin Blueprint for Corporate Balance Sheets. The document states that Block plans to buy Bitcoin for investment purposes with 10% of its monthly gross earnings from Bitcoin goods. In keeping with Square's strategy, the business also revealed information on its current Bitcoin holdings, including acquisitions made in 2020 and 2021. Block possessed 8,038 Bitcoins as of March 31st, 2024, which is almost 9% of their total cash reserves, cash equivalents, and marketable assets. Raoul Pal said in conversation with Adami that Block's move is probably only the beginning, and that many other businesses would probably follow suit in the coming years. It is anticipated that such strategic changes in corporate financial planning would pick up steam as the weaknesses in the global economy become more obvious. Let's get back to Raoul's interview.
MicroStrategy is going to keep developing its Bitcoin position, and yeah, it's going to get exponentially harder, right? This last week, you saw Block announce that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world. And they're all in a marketing war with each other. And so they're going to go harder. So I think, and at some point, you're going to see these Russell 1000 companies, right? Which one of them wants to crawl out of their zombie state? It's like, you're just waiting for someone to decide they want the money. So I think that when they do that, they drive up the price of Bitcoin, and I have to chase it. My first Bitcoins were below 10,000. And, and I'm buying Bitcoin in the 60s now, and that's okay. I don't know where we'll get to. I know we'll get more. We'll accrete from here. We will acquire more Bitcoin than we have right now, and we'll do it via, organic cash and via debt, especially convertible debt, and we'll do it via equity. And that'll be a function of capital markets and all sorts of other dynamics. But I think, Archimedes said, you give me a lever long enough and a place to stand, I can move the world. Well, the place to stand is Bitcoin, right? I mean, it's not a commodity, it's a scarcity. So if it's a scarcity, it's like if I said to you, there's one city, it's at the trade crossroads of the world. It's the center of the digital economy. One day, everybody on the planet's going to be moving their capital through that city, but there's only 276 by 276 by 276 blocks in that city. And by the way, it's like 94% occupied, but you can buy another one of those blocks if you want. Do you want to buy some more? And the answer is, yeah, I want to keep buying, because just like if I could have bought New York or Manhattan 100 years ago, or 50, or 200, or 30, or 300, tell me, at what year, how many years ago was it a bad idea, right? I think it's always been a good idea. If you can hold, right? As long as you can hold the property. And why is Manhattan a good idea? Because it's a granite island at the middle of Long Island Sound and the Hudson, and it's got great natural harbors. It's the gateway to North America. It was always the best place to put a port, right? And if you look at it and you cruise around it and you stare at it and you look at the fact you can build that on top of that schist, it's obvious people are going to want to live in and do business in that city for hundreds of years.
The discussion by Raoul Pal offers a thorough understanding of how the environment around Bitcoin is changing and where it will go in the banking industry. He begins by praising MicroStrategy for its continued efforts to strengthen its position in Bitcoin, emphasizing that the work gets more difficult as the firm grows. Pal continues by highlighting current market trends, such as Block's declaration that he will buy Bitcoin every month and the tendency of Bitcoin exchanges and miners to build up rather than sell their holdings. According to his prediction, this tendency is expected to continue as more exchanges and miners join the battle and as already existing exchange-traded funds, ETFs, acquire more Bitcoin in an effort to beat one another in the market. Pal makes further assumptions on the possible participation of Russell 1000 companies, speculating that some would choose to engage in Bitcoin in order to improve their financial situation. He says he is certain about the worth of Bitcoin in the future, citing his personal experience of purchasing it for less than $10,000 and keeping adding to it even as its price rises to the $60,000s. He describes how MicroStrategy plans to increase its Bitcoin holdings by using a combination of equity, debt, and organic cash, contingent on the state of the capital markets. Pal makes an impact in his concluding remark when he compares Bitcoin to a metropolis of unmatched significance, comparing its inherent worth and uniqueness to owning prime real estate in Manhattan centuries ago. Like hanging on to valuable real estate in Manhattan throughout history, he highlights the long-term value proposition of Bitcoin and the logic of sticking onto it.